Well, recent hospital IPOs have seen strong gains, rallying anywhere from 28 to close to 150% from their issue prices. Valuations too reflect these strong gains, as you can see on your screen. Now, models specific to these hospitals that are tapping into India's low bed count of around 0.5 beds to 1,000 people range from being specialty plays such as Rainbow, which is a pediatric hospital, to Dr. Trihan promoted Medanta, to core marketplace such as Kim's in the south and Jupiter in micro markets in the west. Their business models, combined with growth drivers such as the government looking to up healthcare spend to 2.5% of GDP by FY25, increased awareness amongst patients, especially post-COVID-19, advancement in surgical procedures, increased medical tourism, are making analysts bullish on their earnings. Now, estimates are that in the next 3 years, the EBITDA CAGR range could be up to 20% for a few of the newly listed hospital companies, including the impact of dilution from expansion plans that they have. This EBITDA growth is expected to be aided by improved occupancies. For example, Yatharth is expecting its occupancies to inch up to around 60%, while the newest listing, Jupiter, is expecting their occupancies to scale up to around 80 to 85% on a sustainable basis. Higher occupancies reducing inflation are expected to aid the overall average revenue per occupied bed. While Yatharth, for example, expects their ARPOPs to move by around 10% to around 30,000 rupees, companies such as Jupiter say they need to be sensitive of their geographic location when it comes to this parameter. The street, however, is estimating around a 5 to 10% annual increase in ARPOPs on average for hospitals. Also, companies are focusing on asset-light expansion, such as management contracts where break-even becomes faster and is more efficient from a cash return standpoint versus brown and greenfield expansion, which is more EPS dilutive. Lastly, while the market is factoring in strong earnings growth, which is reflective in the valuations, it is important to be cognizant of the risks, which include occupancies not picking up as much as anticipated and the regulatory risk, which could range from a cap on consumable prices to increasing caps for concessional treatment.